Let's dive into a project analysis today. You guys are going to love it because it's going to break down flow and give you some insights of where this chain is going. And we'll get started. I just want to thank our sponsor today, and that is iTrust Capital. This is where you guys can start getting into long-term strategies around your crypto, and the way you do it is a crypto IRA. One thing you can do, of course, over there is join and get a $100 funding reward if you use our link to get started. Let the iTrust team know that we have sent you over there, man. They've got a lot of news, too, happening, so keep an eye. They are getting ready to launch a lot of new products. This is the place for you if you're considering crypto IRAs. I want to go over to a couple of points we've hit on for a while. Flow is one of those ancient topics that we have had here on the show, and it's one we've done a variety of videos on from a lot of different angles because we kind of like where it has been going. And of course, there has been times, I know many of you will say, well, Paul, it hasn't been moving here recently. Let's look at some of the fundamentals. We're going to bring on Roham in a minute to kind of break down what those are. If you look at the activity right now, flow price, you can kind of see where we're going. This is the ranking right now, 191 in terms of the overall coin market cap position. And if you look at market cap in general, it has been a downward motion, but of course this may change as we start to see things happening on chain with the TVL continuing to grow. So pretty significantly as well when a lot of other markets have not necessarily moved. And of course, if you compare over on Dune Analytics to some of the competition that are out there, you've got Flow, Adara, Ton, Near, but notice Flow, upward trend. Some of these other major tokens not necessarily in the same place in terms of TVL comparisons. So that's kind of the thing that we're looking at here. One other thing I want to kind of hit on right here, this is one of the fastest growing L1s based on a 30-day chain. You've got Flow holding at over 1,000%. Aptos is in the run here. Polygon is in the run here. So definitely in good company going forward. And if you look and compare to another chain, SWI, and you look at where SWI is holding right now at 154, this could get interesting because SWI, of course, has a market cap of, that's right, guys, 5.6 billion right there. So very interesting as we start to move in. I want to go over to our guest today, and that, of course, is Roham coming in from Dapper Labs and Flow. How are you, Roham?
I'm doing amazing. Thanks for having me.
Nice to see you back. You were on our show a couple times. We've had you. A lot of updates. I want to go right into the enshrined protocols model that you guys have gone and done. Explain that to our audience first.
Well, first of all, the concept here is that Dapper Labs, the for-profit corporation, the company responsible for NBA Top Shot and a whole bunch of other successful crypto products, is building on top of technology that's being built by the Flow Foundation. So my former co-founder, Dieter Shirley, runs the Flow Foundation. They're going to build the protocol. We're going to build the application.
Okay.
But the key point about what we're doing differently this time is a protocol is available for use for everybody to build on top of. So It's enshrined in the sense that it's a dedicated protocol for its given use case on top of the L1, and it drives value and revenue back into the native token. But it is an open network that anyone can build on, unlike, let's say, NBA Top Shot, the first version, which was more of a application that was difficult for outsiders to build on top of.
So you guys, of course, have launched Peak Money. This is going to be a new multi-chain product earning 15% or more on your USD savings. So explain this. What does this do for Flow?
Well, so here's the unique thing. So the first enshrined protocol we're developing is called Flow Credit Markets. It's a new kind of a lending protocol which has automation built into the smart contract from the ground up. And so what that means is that borrowers can go much higher in LTV while minimizing the risk of liquidation. And we're going to be publishing all these papers that show every single one of the crypto crashes over the last 10 years. This system would have ridden them out with zero liquidation, which of course matters a lot to normal people. If you stick your Bitcoin or your stable coin somewhere where you're trying to earn 10, 15% yield, you don't want to end up with a liquidation if there's a price drop or some sort of Oracle exploit or whatever it might be. So that's the fundamental core of it, is a lending protocol that lets us get higher LTV while minimizing liquidation risk. And Peak Money is a wrapper around it that lets users bring whether it's stable coins, connecting their bank accounts, they can buy Bitcoin, they can buy Ethereum, of course, they can also buy Flow. And then they can put that into the lending protocol, borrow out stable coins, put it into those yield sources, delta neutral, and that's where the yield is driven from. And it's all transparent, all on chain, all non-custodial, and fully audited and auditable by any individual. And that's just the start. And so basically it's the model that shows what the future of finance is going to be, which is instead of these complicated intermediaries and structures where you have to negotiate individually, you just have autonomous tokens that sit in user wallets and take actions that they're programmed to take with assets all across the world. And so it's going to start with cryptocurrencies, obviously, whether it's Bitcoin, Ethereum, Flow, but it'll the same system applies equally well to any tokenized asset. And as you know, trillions of dollars of real world assets are going to be tokenized in the coming years. And so that's the reason we are moving into this direction. That's the reason we were so passionate about making Flow fully interoperable with the Ethereum ecosystem, so liquidity can bridge in and out super easily. And the applications that we're building are designed to let anybody take advantage of the power of tokenization and DeFi, whether they want to invest in stablecoins or invest in crypto, or just benefit from the increased yield and the more complicated, more accessible investment products that are going to be available to them.
So explain to me how you protect against that, especially liquidation issues or events that, I mean, I've seen some products out there that have kind of built this in, but how does yours work?
So it's very simple. So basically the on-chain automation looks at your position every single second, every single block, which is actually faster than a second, and rebalances it to make sure you don't get liquidated. And the way it rebalances it, because all we've done is we've taken your Bitcoin, we've put it into a lending protocol, we've taken out stable coins, and those stable coins are sitting somewhere earning yield. And so instead of selling your Bitcoin when the Bitcoin price drops, we just unwind your USD position here, pay back the USD debt, so you don't get liquidated. And when Bitcoin pops back up, we take out more USD, put it into the yield source again. And so effectively, as long as the yield source is chosen to be something that's delta neutral and denominated in the same currency as the borrow, then you're not liable to, you're not exposed to currency risk. And we're picking yield sources that are safe. And again, you can combine TradFi as well as crypto yield sources.
I'm going to be interested in taking a look at this. When does this thing launch? Is it available now?
So Flow Credit Markets is on mainnet right now. there's no like dev docs or anything. It's still going through sort of final audits. Peak Money, we're opening the wait list December 2nd. So by the time this airs, the wait list might already be open.
So perfect. So we'll have the launch of Peak Money. You guys will be able to jump into this, because that's the problem I think a lot of people have run into in a lot of these yield markets is it's very complex getting into them, moving your assets in and out. You know the problem that's been out there for some time. What happens to like More Markets, Kitty Punch, some of these other platforms? What happens to those?
So More Markets is the first lending protocol on Flow. It was a sort of advanced Aave implementation. We're working with that team really closely to make sure everything that we're building on Flow Credit Markets is fully EVM compatible. So I believe they're going to be the EVM front end. So you can come with your MetaMask, you can come with your Trust Wallet, whatever EVM wallet that you have. And interact with the Flow Credit Markets smart contract that sits on the Cadence side, benefits from the higher safety and security and lower costs, et cetera, there. But More Markets basically becomes the interoperability layer. Kitty Punch is the DEX, the sort of Uniswap implementation that sits on Flow, and that's being used for all of the trading. And so this product will drive more and more volume into their application. So for example, on Peak Money, when you on-ramp, you're actually buying PayPal USD and you're swapping that for Wrap BTC that's also natively deployed on Flow. So all of that volume helps.
We've shown that, in terms of the yield numbers on Kitty Punch. So what about the liquidity side? Is this similar to DeepBook, like what DeepBook and Sui have done in terms of liquidity depth?
Well, the liquidity depth is also something that's going to be benefiting at the whole ecosystem, because a big part of this effort working is bridging in yield sources from different currencies. We're working very closely with Layer Zero on their OFT implementation as well, and making sure there's really deep depth for currency swaps, whether it's between stable coins as well as Bitcoin, Ethereum, Flow, and stable coins.
Yeah, I was just showing, this was the deep book example that was being used in terms of institutional grade liquidity. This is a thing that I think will start to take up, because this, of course, is Grayscale talking about this right here. And it's going to be something that we're probably going to see more sophisticated investors starting to look at some of these kinds of platforms and utilizing. Do you think we would see any kind of institutional moves onto something like what you guys are doing with Peak Money?
Yeah, 100%. I mean, the both Peak Money as well as just deploying into the smart contract natively, because a lot of the folks that are most interested right now are folks that are already sitting on large amounts of Bitcoin, stable coins. They're already in these yield farms. And so this is a way for them to sort of get more juice out of the work that they're already doing. And so those will be a big drivers of TVL into flow credit markets, the smart contract. But the Peak Money product is aimed to be retail, and it's going to start with millennial, et cetera. But then it's going to layer in more gamification, more opportunities for sort of the asymmetric opportunities that exist in DeFi, make those open and accessible without the complexity of the crypto side, right? Which is the key management, the onboarding, the MEV, the front running, all of those kind of pieces we abstracted out completely. Part of it because of just Flow natively has MEV protection, all of these things. But part of it because of our application. So the on-ramps are going to be super simple, credit card or bank account, or just transfer in from, connect your Coinbase, transfer in from crypto. So it's part user experience, part technology.
What about native vaults within the Flow wallet? Because we've seen this in the Slush wallet with Sui. We're starting to see it in other wallets showing up, vault control, vault management. How are you guys going to do that?
So same concept. It'll be an open system where I think it's either earn.flow.com or vaults.flow.com that will be up in the next week or so. And anybody can come in and create their own positions. And eventually we'll be able to design their own strategies. So it's a fully EVM compatible as well. I believe we're using the same standard as Veda Vaults and others. And some of the strategy operators that are currently most active on other chains are also coming in and setting up their own strategies. So you can buy into those vaults if you want access to different sort of risk return profile. It's all transparent and auditable. But as you mentioned earlier, part of the thing we're trying to stay away from is just like black box DeFi thinking, saying, hey, there's a percentage rate, and then you just put it here, and then you got to trust me.
And wish or hope. Hope is not a strategy. Hope. Dapper Labs moving Treasury on chain. What stablecoin are you guys going to use? Would it be PYUSD?
The whole ecosystem is centered around PayPal USD right now. There is obviously USDC as well, and potentially Tether down the line. But but PayPal represents kind of that consumer vision as well, right? And we want deep interoperability with other consumer financial applications. And the other thing to recognize is the programmability of all of this means that any consumer product can now very easily give their consumers a wallet, give those wallets access to DeFi, whether you're a game, whether you're a social network, whether you're anyone that has consumer eyeballs can use this as an opportunity to deepen the relationship they have with their customer, make extra money, and effectively sort of offer the whole world of DeFi to their customers. So these kinds of like platform integrations we get really excited about.
Yeah. Would this update mean that Flow is deflationary? Because I'm looking here at your statement. Update creates a direct link between network usage, network value. In fact, this model is designed to make Flow token net deflationary at a sustained 250 TPS. That's basically the goal here? Or is it done?
Yeah, exactly.
That's available now.
No, it's still going through community reviews. And so it's in the late stage of this kind of comment period until next week, something like that. But it seems pretty positive that it'll go through. It'll still, even after this change, Flow is going to be the cheapest high throughput network compared to L2s like Base, et cetera. We're by far more efficient, not because we're compromising on decentralization, but because of the architecture where we have different node types and we don't do any more work than is necessary, whereas most legacy blockchain architectures are sort of every node does all of the transactions in the network. And so that we have a fundamental advantage at like the protocol layer for cost, But the cost has been kept artificially low, and so sort of correcting that. And I think that's going to be very important. The inflation on the network has been a source of the sell pressure
Yes.
on the token, and so fixing that is going to be a very important part of making sure that activity on the network drives value to the token economy,
Yeah.
which is what leads to a healthy sort of flywheel.
Yeah, well, it definitely could trigger some movement on the price too. Okay, so the couple of points that I wanted to hit on here in terms of apps. First of all, you look at Top Shot. This is just from your statement. Had they launched on an open protocol from day one, massive amount of liquidity wouldn't have stayed in the silo, which is something that we've talked about here on the show before. It would have flowed outward, bootstrapping lending markets, vault strategies, RWA innovations. You can kind of see that era is over. The regulatory tailwind supporting now what we're seeing in crypto regulation here in the U.S. This uncertainty is removed and barriers Dapper Labs flow, independently share a unified mission, network economic alignment. So this changes a lot within Dapper Labs where they could have maybe launched a token.
Yes.
This is are you going to see, how quickly do you think we'll see these strategies shift for major companies like this?
Well, I think the strategies are shifting already. It's been a process, but for our partners, let's say the world's leading companies, most loved brands, Disney, NBA, et cetera, everyone is looking at what's going on here. But it's really important to have a sustainable model where you're actually benefiting your real community members. Every time someone's launched a meme coin, every time someone's launched a sort of speculative endeavor, it's gone through a cycle that has harmed some of the most core fans. And so that's what we're trying to do sort of differently here, is give a model for the world's best companies and leading brands, major institutions, to kind of interact both with DeFi and kind of offering yield and these sort of financial opportunities to their customers, as well as with fungible tokens, and using crypto incentives in a way that builds sustainable and sort of healthy co-ownership, not this sort of short-term sort of pump and dump type mentality.
Which has been the issue that we've seen with a lot of tokens. You mentioned Disney. Do you think they will embrace an open ecosystem like this? I mean, because Disney's fairly locked up a lot of times in terms of their IP.
Well, yeah, of course. I mean, the use of the IP is really critically important, but that's also where blockchain technology shines. And in a way, blockchain technology is digital rights management on the internet the way it always should have been implemented. And you can bake in rules into every asset, rules that can't be broken. And so that mindset shift from saying, hey, look, anything we put on digital is basically kind of giving it away, versus, no, these fans are our highest value fans. And even today within Disney Pinnacle, within NBA Top Shot, we have a sustained, $100+ a user, average revenue per user. And these numbers are off the charts compared to, let's say, subscription revenue or advertising revenue, which is fractions of that. And so crypto is a whole new business model for these brands. It's a new business model, new way to engage with fans in a way that, makes them not just consumers, but co-participants, co-owners, co-promoters in everything that you're doing. And they're 100% seeing that. Now, the reality is, though, they've got billions of fans. And so the technology has to work for not just the most tech savvy 1 to 2 million. It has to be for everybody, and it has to be rock solid, and it has to be proven for years and years. And so I have no doubt that every major company will adopt crypto rails as their economic sort of backbone. And it's just a question of timeline.
Yeah, we're getting into a new era for sure. Obviously, the regulation front has done that. But back to Disney for a second. Why do you think? Okay, so the clarity here is that this has not launched. We still see Pinnacle that gets into a scenario where your NFTs are locked up within the platform. Why do you think that has been the case? I mean, when are we going to see a 24/7 marketplace here?
So obviously you can look at kind of NBA and NFL as models for those assets are fully able to get pulled in and out of the custodial, non-custodial environment. They can get listed on OpenSea. They can be collateralized for loans, all of these things. And as I mentioned, some companies are just more conservative than others in the sense of needing more time for something to age in the market before they can adopt it. Some things are like cheese to some people. You need to let them age, and
Okay.
and I would say that that's the approach here. But you might have seen this year we announced with NBA Top Shot that all of the metadata, all of the videos, the kind of the core pieces that make the NFT valuable to the fans is going to be on chain, and that's the first in in a major IP backed project, and kind of means that it is actually fully a decentralized digital object, and that's powerful because it's the precedent, I think, for all major IPs to follow. And so it's kind of one step at a time is how I would look at it. Disney Pinnacle just formally launched a couple months ago. It's been growing. It's been doing well. And the other piece is we're trying to really integrate it deeply into the fan ecosystem. So whether it's Disney Plus, whether it's Anaheim hotels and near Disneyland, whatever it might be, we're trying to go where the fan is, and we want the digital product to be something that the partner is comfortable enough sort of continuing to grow and putting it out there instead of maybe financializing it too early.
Yeah. Well, I mean, we've been talking this for a while. I was looking back on our own channel. This was 9 months ago. We were talking about getting this done, and maybe now with regulation, obviously this plays into how companies are thinking.
Well, so
about it.
Yeah, I mean, look, the unlocking Ethereum's potential, like that happened, right? We shipped that upgrade late last year, and since then, Flow's been number 1 or number 2 fastest growing in terms of number of developers. As you showed, the DeFi chart is kind of the shape we like to see, and I think the thesis kind of worked positively there.
Here's a question I have for you. I'm looking at ESPN Bet, all right, Sportsbook. Why wouldn't this be automatically on Flow? I mean, come on. This is like a slam dunk. No pun intended.
I agree. Look, I think the for one thing, the lines between entertainment and finance are blurring, right? Like the new generation.
Is that ESPN honking outside your door there? I think that's ESPN.
No, I think so. They brought a helicopter.
I love it. All right. Well, maybe Penn Entertainment could do something here because this would be a big one for sure. BZ on the move right now. What do you think is holding BZ from kind of flipping Courtyard right now? Courtyard kind of the king in terms of where we're seeing a lot of these NFT movements go.
I think they're doing really good work. The coolest thing about BZ is they're not saying, hey, let's replace every layer of the stack. They're not saying let's replace the reseller, let's replace these partners.
Right,
they're saying let's build software for them. It's almost like Shopify. Let's empower all of these, everyone from card shops to folks like Tag Rating to offer these, and OpenSea. OpenSea recently did a claw with BZ where they offered real world.
I'm looking at the Challenger claw right now, which is a good example of that, to your point. Yeah.
Yeah, so any brand and anyone with sort of distribution can go to them, grab their full sort of stack, and be able to put their own user experience around it in order to kind of create their own claw. And I think that's how they catch up and then blow past sort of the impact that Courtyard's had on the market.
Okay, so gaming has been one of those things. I'll just to kind of show here, we're just looking at revenue general in terms of Flow kind of being in that top position right there. You see Courtyard kind of controlling it right there. So the market is clearly ready for something like this, for sure. You look at gaming in general. Now, over the last, I know Web3 gaming, people will argue Web3 gaming definitely not growing, even though we saw Avalanche winning all kinds of awards just last week, at the Web3 gaming scenario. And then you look at what, Sui has been able to do with locking up Bing Gordon. I mean, these are big moves for Web3 companies to be able to really kind of get into the gaming cycle. Do you guys need possibly maybe a gaming advisor, someone big? Who could we get?
Look, I mean, I know Bing well. He's actually been an advisor to Dapper for many years now, and has recently kind of leaned back in on a couple of the newer products we're building. He's an absolute genius. And obviously we have other geniuses on our around the table, like Mark Pincus, founder of Zynga,
all right.
Or founder of EA. We have some amazing folks around the table. And then the other thing to remember is every market shift, every platform shift, new things emerge that make the new realities of gaming different. And so in this one, it's open economies is a very important dynamic. So we went after the co-creators of Magic the Gathering, Richard Garfield's Scaff Elias. They were part of our early advisory group. We have some amazing folks around the table. I mean, the reality is that we're just scratching the surface. And we're scratching the surface on what crypto can do inside games, what Gen AI can do inside games, what crypto and Gen AI combined can enable inside games, like actual economic experiences that are impactful to daily life. Those products just take a little bit longer to build. We're not that far away from someone walking into a Roblox bank and doing real banking with their stablecoin wallet and accessing yield and all of these things. The technology is there.
What I'm hearing. I like what I'm hearing. Everybody's been kind of pointing to this for quite a while. I mean, we've been gone back probably 3 years in terms of our excitement around this, and of course, then we saw, the market slow down. Obviously, we didn't have regulatory alignment, which is now a big factor, I think, that will move a lot of these big companies. And if the money comes in, then yeah, I think we're going to see it. Let's talk Flow Rewards real quick before I let you go. Flow Rewards Season 1 over. When will we see Season 2? What is that going to look like? Any new updates?
I think T's working on it. I'm not. I think the main theme of it is that Season 1 was a great success. It was very focused on kind of the consumer products, getting people to try different applications. Season 2 will be very DeFi focused. The snapshot for Season 1 was just taken a little while ago, so people who still have boxes and keys will be getting a Flow airdrop. And then the next season is going to be the big one. So stay tuned.
Yeah, very cool. All right, listen, this has been a good one. Rohan, thank you so much for coming in. I love catching up with you because you always get me excited about stuff again. And but it's fun to, and maybe now we're going to see some movement in the market. I think this is one of those times where maybe there's a window here that we start seeing things happen. Thanks for coming in, though. We appreciate it.
Thanks for having me. Always fun.
You bet. All right, you guys know what to do. If you are not in the Barron Market Edge, you should be. It's our own private group that you can join for absolutely free. You get free research, insights, a whole bunch more in terms of my own personal email that goes out to you guys every week. Of course, just click the link down below. And of course, follow me out there on X, @Paul Barron. We'll catch you next time right here on The Paul Barron Show.